the nation building spending benefiting a company like Brookfield? Do you have to sort of think about it in those components?
The pieces are falling into place. Welcome back to Moose and Loose. My name's David. Today we're talking about the housing industry and everything connected to it. Mortgages, lumber, and Brookfield. Seems they've been putting in pieces for a long time to cash in on the Canadian housing crisis that Justin Trudeau created. Let's jump into this. About a week or so ago, Mark Carney came out with this announcement. $700 million support for the lumber industry and $500 million in grants and subsidies helping out the lumber industry.
To make the softwood lumber industry more competitive for the long term, we will provide an additional $500 million, largely in grants and contributions to supercharge new product development and new market diversification.
New product development. Keep that in the back of your mind.
Products such as reinforced timber and low-carbon wood fiber-based insulation materials that are used in prefabricated and modular housing.
So low carbon insulation for prefabricated houses. They've been setting this up from the start to make money off of these modular houses. Trudeau jacks the immigration. Mark Carney swoops in with Brookfield to pocket the profits. I'm sure Justin Trudeau has millions of dollars invested in Brookfield too. They all did this together. I'm sure Chrystia Freeland does as well. So jumping over to my trusty chart here, it's time to talk about housing and mortgages. Brookfield has been adding mortgage companies very recently in the last week and a half. We'll get to that later in the video. First off, we're going to talk about lumber because you can't build houses, even prefabricated houses, modular houses, without lumber. Here's Brookfield's lumber section. They have got out of this industry for the most part, the logging of lumber. So former logging assets here. They used to have Longview Timber sold to Weyerhaeuser in 2013. They also had BC Coastal Logging Operations sold by Brookfield Infrastructure in 2013. Just some receipts here. You see Brookfield closes US D1B and Global Timberlands Fund. So essentially shutting down that aspect of their logging portfolio. So in basically 2013, they got out of the logging industry, but they still hold a ton of land. So they have island timberlands, which I know very well because they're on the island here in Vancouver Island. They have 628,000 acres of managed forest land, primarily on Vancouver Island, focused on sustainable harvesting, land leasing, wood sales. Vancouver Island has some of the worst gated land in Canada. What they do is put a gate at the start of all these logging roads and don't allow anyone back to enjoy the forest, the crown land. Now, the logging companies on Vancouver Island, like Island Timberlands, Mosaic, etc., some of the land they own, like you see here, a lot of the land they log is crown land. So they'll gate the start of the logging road so no one can go back there. People who have gold claims, people who want to go hunting, fishing, backpacking, hiking. People want to go for a drive, look for waterfalls. It's very limited. There's hours of operation. A lot of the gates are closed and they have very strict rules like a $100,000 penalty if somebody who has a key to the gate allows someone through when it's supposed to be closed, or if they duplicate a key or they share their key. And they say this is because people go out there and vandalize their equipment or whatever. A simple solar camera pointed at where you house your equipment for the night would solve this problem. The history of the land of Vancouver Island is a long history. Half the island got sold off. There was a dirty deal done back in the early 1900s, and now these big companies have all the land, essentially. We're not getting into all that, but it comes to crown land. There's logging mains, the main roads that go deep into the forest. Those are partially paid by tax dollars, even though these logging companies put gates at the starts of them. I haven't ridden the back of a truck for like 25 years. So first off, this whole situation is corrupt, and it's just funny that it comes back and it's Brookfield is one of the major sore spots here on the island regarding those gates. Before we get too deep in the weeds here, so I've added in Mosaic. Mosaic manages the lands around here. They're owned by Island Timberlands and they're owned by Timber West. Timber West is owned by PSP Investments, Public Sector Pension Investment Board. This is a whole other rabbit hole. We're not going to go down here right now, but the other owner is BCI, British Columbia Investment Management Corporation. So they own Mosaic. Mosaic is a Vancouver Island-based logging company formed in 2018 through the merger of Island Timberlands, owned by Brookfield Asset Management and Timber West, owned by BCI and PSP, operates and manages 560,000 hectares of private timberlands, producing logs for domestic mills and export markets. So a lot of these logs get cut down, put on ships in Port Alberni, and shipped over to Japan, to China, some of it getting milled here, but a lot of it getting shipped overseas. Our mills are shutting down here on Vancouver Island, and a lot of these raw logs are going out for export, which means bigger profits profits for Mosaic and for Brookfield, but less jobs for Canadians. It's quite disgraceful. It's ironic the entire time on Vancouver Island dealing with the gates, the logging gates, which are such a pain in the butt. That's all Mosaic. Turns out it's all Brookfield the entire time, Brookfield and Timber West. So this is the majority of Brookfield's logging business right now. It's raw logs. It's land. As we see here, they have Island Timberlands. They also have Brookfield Timberlands Fund, VLP, which is 3.3 million acres combined global forestry portfolio assets in the United States, Brazil, Australia, potential holdings in Canada, Chile, Uruguay, and New Zealand. And the other thing that Brookfield owns logging related is this. So they have Norbold Inc., which is in Canada, Canadian manufacturer of engineered wood products, primarily OSB, as well as particle board, MDF, and related products for home building, renovation, industrial uses, aka these products are probably going to be going into Brookfield's modular housing to build for Canada when Mark Carney starts handing out contracts to them. Headquartered in Toronto with operations in Canada, US, and Europe. And they also own this company here, Ainsworth. So we can see here from this press release back in 2014, they bought Vancouver's Ainsworth Lumber, bought out by Norbold for $763 million. This company is a Canadian wood products company that manufactures OSB, oriented strand board, used in residential and commercial construction, operated mills in British Columbia, Alberta, Ontario, plus facilities in the US. So Mark Carney announces low carbon wood fiber insulation. I checked, these companies don't produce that yet, but since he just offered $500 million, I wonder if a contract is going to be sliding over here somewhere to one of these companies where then they will start producing that with free Canadian tax dollar money. This is what we need to watch out for. That's why this work has to be done, because anything Mark Carney does, we can just slot it right in here and see what he's doing. And ultimately, is he going to financially benefit himself doing this? So Brookfield has a lot of land. They can cut down a lot of trees. They can produce a lot of products that'll be used in modular homes. They've got Modulaire Group, a company that makes modular homes. They've got mortgage companies here, which we'll talk about in a bit, to offer mortgage for these homes they sell to Canadians. As Government EXE here says, Mark Carney says he's helping softwood lumber sector with $1.2 billion in loans and grants. He doesn't mention that Brookfield holds significant positions in some of Canada's largest softwood lumber companies. How is this not a massive conflict of interest? It is, along with the other 104 conflicts of interest this guy has. So while he prances around these facilities, using our money, giving grants, giving out money, helping the industry, he's helping himself. That's what he's doing here.
Our goal is to double the pace of housing construction to almost 500,000 new homes every single year. Homes you can afford to buy. Homes that are more sustainable and cost less to live in. Homes
like modular homes that the company you have millions of dollars invested in produces?
Made right here with Canadian ingenuity, Canadian labor, Canadian products, including softwood lumber and mass timber.
Softwood lumber that you own shares in? This guy can't be prime minister. This is such a joke. He should be thrown out, or he should be forced to sell all of his stocks immediately. With Mark Carney becoming prime minister, what have we seen? We've seen, well, this on Bloomberg BNN here. Brookfield's deployable assets at record high. I wonder why. Why are they at a record high?
Right. Well, Brookfield is a universally known business for touching the global economy, whether it's real estate or renewable energy. The company has a wide footprint and is increasingly getting Berkshire Hathaway references as they prioritize the long-term plan. Case in point, the CEO, Bruce Flatt, now talking about an increased focus on their insurance operations. Christopher Ballard is a managing director with Czech Capital Management and joins us to talk a little bit more about the business. Nice to have you with us. I'd say let's talk about the quarter, but these companies that are thinking in decades rather than 3-month increments are probably worth considering from that vantage point. For those who want to know what sort of Brookfield really represents as an investment today, how would you characterize it, Christopher?
Yeah, it's definitely a long-term investment with a great global footprint in a lot of different industries, being, renewables, infrastructure, real estate, private equity, asset management. They really have their hands in a lot of different aspects of our lives, whether it's through corporations and institutions or governments. So yeah, if you're thinking about Brookfield Asset Management, it has so many different moving parts and components. You really want to think of it as a long-term play. That the small moves that happen, like on a quarter-to-quarter basis that you mentioned, will all look kind of small to us in the fullness of time. So when you're thinking about it, you want to kind of think about something that is in a perfect place to, grow over the period of time as the world develops. And it seems to be right on the cutting edge of this AI infrastructure build out. There's really so much to get into when it comes to the business, but
they're right on the cutting edge of milking Canadian taxpayer dollars. Let's call it what it is. You can see here all-time high. This is showing just the past year. And a year ago, they were just about $60, and now they're about 90, 91.
I like that you mentioned that you don't really want to think about it on just a quarter-to-quarter basis, but
well, I think some of the things that they've been talking about even this week would speak to the fact that it's very difficult to measure over a couple of months. Christopher will hopefully rejoin us in a little bit, but just as some context for the company right now on that AI part, they are working to assemble 7 major AI computing sites that would include power and data center shells, which are going to be built out over the next 5 years in the US, the UK, Canada, Europe, and they've talked about the cost associated with that being possibly a couple of $100 billion in capital. So, if you think about what big tech giants are spending, I mean, CapEx bills for Amazon, Microsoft, Meta, Alphabet next year are enormous. Part of that is because they have to think about some of their data center needs. And now Brookfield is in the same conversation, a company that has benefited from its real estate footprint and sees these data centers as a part of the big real estate play going forward.
Let's look at their real estate and their data centers. So I've reorganized all of Brookfield's real estate over here and have them properly under their right business title now, because they have all these separate corporations like Brookfield Business Partners, which has Brookfield Relocation Services. We got Brookfield Real Estate going down to Brookfield Property Group. Then that splits off into Brookfield Properties and Brookfield Residential and Brookfield Property Partners. It's all very complicated and confusing. Under Brookfield Residential, they develop and sell townhomes, single family homes, and master planned communities. And that's what we've got here. A whole bunch of them, mostly in Alberta, Edmonton, Calgary, Airdrie. There's a couple other ones, though. You can see they've got some in Texas and California, Colorado, and Austin. And over in Brookfield Properties, they've got this one, multifamily rentals, offices, malls, logistics. For rent, they've got townhouses. This one here in Vancouver. And for apartments, they have a bunch, but a lot of these are in America. You can see these ones here: New York, Brooklyn, New York, Seattle, Washington, Jersey City, Cambridge, Massachusetts, Eugene, New York City, and single family homes. Once again, a lot in Calgary, Edmonton, Airdrie, Austin, Colorado. And then here's a list of all the home locations. So they have a bunch more, and here's all of them: Georgia, Birmingham, got Alabama, South Carolina, North Carolina, Ohio, Florida, Missouri, Pennsylvania. So a lot in America as well. They're all over the place. And underneath that, we can see here they have other properties, malls, rentals, all that kind of stuff. They've got Brookfield Place in Toronto. Brookfield Properties retail is the malls, retail stuff. Once again, though, this is not fully fleshed out. Brookfield has a ton of businesses. It takes time to fill this thing out. And as for data centers, so I've got them all over here. Brookfield Infrastructure Partners has the data centers, and that's these ones here. So Compass Data Centers, Center Square, Data4. This one's in France. You can see the first two in America. Ascenti in Latin America, Digital Connection in India, and the newest one here, the Swedish AI data center, nearly $10 billion deal. This was in the first quarter. So Brookfield investing in the future. I mean, AI data centers will be the future. They know where things are going. The thing is, they're trying to move people where they want things to go. They know a lot of power is going to be needed. They want that green energy coming from, stuff like this, Westinghouse Nuclear Services. And then they want the carbon credits, which they're also invested in, all this stuff, which we can see here. I changed the logo, so it says double C now for carbon credits, carbon credits, carbon credits. And as you zoom out, you can see those logos all over the place here. Tons of carbon credits, which wraps directly into this whole system of data centers. I wouldn't be surprised if Carney rolls out a plan to force carbon credits for energy produced for new industries like this for data centers. And then Brookfield will be there just to pocket the cash big time. We still haven't heard much from Evan Solomon. He's the first minister of AI, even though the guy doesn't know anything about AI. He was a CBC reporter. Then he went and worked with the Eurasia Group for Mark Carney's friends. We'll see what he comes forward with. Will he have mandates on data centers, energy, all that kind of stuff? Will they allow that dirty oil and gas to power anything with the AI? Will they mandate carbon credits? We'll see.
Putting that into full gear. And beyond that part of the story, Christopher, of the AI data centers, one of the headlines this week is this goal for the company to focus itself into an investment-led insurer, and that kind of prompted some sort of comparisons to Berkshire Hathaway has a big insurance component as well. As someone who tracks the company, what's been your sense of what the messaging from the leadership there has been on what they would like to do? So
on the insurance side of things, they really have their biggest component is their future growth engine, which is the Wealth Solutions side of the business. So the Wealth Solutions they're making purchases on average of like fixed income annuities, if you will, and taking those assets and redeploying them at much higher rates of return. So last quarter, they had $391 million of distributable earnings coming from that side of the business, which continues to grow at a very rapid clip. And we see as being at a run rate of about $2 billion on an annualized basis for distributable earnings in the very near future. At the current run rate, it's about $1.6 billion. So yeah, when they're getting into all aspects of insurance at this point, right? But right now, it really is this Wealth Solutions aspect of the business that they're focusing on. They're trying to deploy as much capital into, and then as they do so, they're able to get these lower rates of return, and then have this nice size spread as they deploy those assets to Brookfield Asset Management.
So at the end of the day, should you as an investor allow yourself to think about this company leaning into multiple trends, whether it's sort of getting more out of its insurance opportunity, whether it's leaning into the AI infrastructure opportunity?
So we already talked about the AI infrastructure. Let's just take a brief look at their insurance here. So they've got Sagan Insurance. I've mentioned this one on the channel before. Canada's largest private sector residential mortgage insurer. According to this article from the Financial Post, Brookfield turns focus to insurance as source of new capital, planning to focus itself into investment-led insurer, making a turn for the Canadian money manager that built its name on the owner of real estate and hard assets. Brookfield, which has $177 billion of capital, has been aggressively growing its insurance and wealth business, snatching up companies in the US and more recently pushing into the UK market, planning to grow as much as $750 billion over time, according to Flat. We see this one from just a week ago. Brookfield and Birch Hill Equity Partners to buy majority stake in First National Financial Corporation for $2.9 billion. First National underwrites services mostly prime residential for single-family, multi-unit, and commercial mortgages, with more than $155 billion in mortgages under administration. It is one of Canada's largest non-bank mortgage originators. So they're getting a complete stranglehold on mortgages and insurance in Canada. This is not painting a good picture for us, considering Mark Carney, the former chair of this company, is our prime minister now. And look at this one, Brookfield Wealth Solutions to buy UK's Just Group for $3.2 billion. This is just from 3 days after that last one. This is like a week ago. Under the deal, Just Group shareholders will receive 220 pence per share, 75% premium on the stock's closing price. The acquisition of Just will accelerate our growth ambitions for the UK, a core region for us, given its status as one of the world's most preeminent pension markets, combined with a highly attractive investment opportunities. So they're planning something here with getting a complete stranglehold on mortgages in Canada. Going back to the chart, you can see the mortgage section here is starting to fill out. And this is just in the past week they've added these two.
Or as our last guest said, looking at this as a possible just broader infrastructure play, when in Canada there's, and obviously there were previous Brookfield ties for the prime minister, the nation building spending benefiting a company like Brookfield. Do you have to sort of think about it in those components? And if so, do those trends, do you think, bode well for this as an investment?
Absolutely, the trends bode extremely well. And I believe that at some point in time, they will do some partnerships in Canada. The numbers have to look right for both Brookfield and the Canadian government. But yeah,
what are you talking about? The numbers have to look right. Carney just announced $500 million of grants for low carbon wood insulation. That's money that's just going to get given to companies. Those numbers look perfect to Brookfield. That's just free money.
With Google, I don't know what was described there for a bit, but with Google, they actually have a recent inked deal with Brookfield where they're going to, it's a very unique and one of its kind deal where they're going to tap into their hydro facilities in a couple of places within Pennsylvania, where they're going to have about 3 gigawatts of power they're going to be able to tap into from those facilities to power their AI infrastructure. So you're talking AI infrastructure. You're also looking at a deal with Duke Energy recently, where they have a stake with Duke Duke Energy in Florida, where they're going to actually be able to tap into that electrical network and power utility network that Duke has there. And then the Swedish component as well. So they're in Sweden. They just did a deal for their digital infrastructure build out. I think they did about a $10 billion deal this past quarter.
That's the one I showed earlier, 9.91 billion.
So yeah, you really do want to think of them as infrastructure. So that again has to do with like hydropower, electric power, all power needed to drive these new AI infrastructures where all the spend is going. Yeah, they're on the cutting edge, kind of right in the middle of that forefront.
Okay, Christopher, appreciate the breakdown. Thanks for joining us, Christopher Ballard.
It's a rampant conflict of interest. There's no way Mark Carney can be prime minister without selling all of his stocks. That's just the Coles Notes of it. We should be building nuclear power plants in this country, and likely Westinghouse would be building those. And Mark Carney can't be making money off that. He has to either sell his stocks or he has to step down. That is the only thing that's acceptable. Our prime minister really hedged his bets, didn't he? No matter what happens to Canada, he wins. Isn't that the truth? If we built anything in Canada, Brookfield's going to get some contracts. If Canada's economy tanks and America's goes up, well, he's invested in America 95%. So he really has hedged his bets, hasn't he? So essentially what we've seen here is Mark Carney has millions of dollars invested in Brookfield, which owns lumber, which owns modular housing company, which owns multiple mortgage companies. Justin Trudeau jacked the immigration, brought in a bunch of people. Now there's a housing shortage, and guess who gets to make money off that? Well, I guess we're going to have to build a bunch of modular homes, small houses, and sell them to Canadians. And don't worry, they'll be affordable. They'll be affordable with those mortgages. This whole thing is a scam. If they didn't bring in these people, they wouldn't have this demand. The Canadian people are being fleeced, and they don't even know it.